Now it's time to talk Chipotle and get the experts' take on their very latest on the earnings report. We have an expert panel for you. Setyan is with us, Managing Director, Restaurants Equity Research at Wedbush Securities, and Hottovy, Consumer Equity Strategist at Morningstar. I'm so glad you're both with us. So it's great to have pros on because you're not just going to give us the light stuff. I want some real details, just like when I order my Chipotle meal and it has little pieces in there. RJ, I'll start with you. Tell me about what you thought about the Chipotle report and where you see it headed. Why?
Yeah, I thought there was a lot to like from the quarter. I mean, comps came in at 8.3%, a little bit better than what the market was looking for, and really driven by some really impressive delivery numbers there, too. Digital delivery is really the key to this company, not only surviving the current situation, but really positioning itself for market share going forward. I know there were some concerns about margins and incremental COVID costs going forward, but I think this is to be expected right now. I mean, this is something that's facing a lot of restaurant companies right now. In fact, the only thing I'm really concerned about at this point is valuation. I do think the market's got a little ahead of itself in terms of the long-term goals for this company, but from a pure operational standpoint, I think there's a lot to like near term.
Okay. And Nick, what are your thoughts here?
Look, I mean, I think it's really simple. Everything is going as well as it could. Instead of going back to $3 in terms of charging, a fee for delivery, they kept it at $1, and instead they want to raise their prices on actual delivered product. And we don't know if it's going to be 7% or 13% or 17%. But when that's settled and it's rolled out, whether it's at the end of Q4 or early Q1, we're going to get our answer, in terms of, the margins and the trajectory of the margins. And once visibility around that is set, I think the stock continues to work because the underlying trends remain tremendous.
Nick, I know you have an outperform rating, right? And a 12-month price target of $1,600. And you talk about the solid results, but the forward commentary does have that uncertainty to which you were just referring, right? Tell me how you get to these numbers and how likely you think this $1,600 is.
I think it's very likely. If we think about the fact that the management team continues to maintain that 25%, four-wall margins is what the target is once they get back to $2.5 million. We're already at around 2.3. Even if you assume mid-single-digit comps for the next 3 years, you already get back to 2.5 million plus, in terms of how per unit sales. And so, at that rate, and if they can get to a 200 unit plus type of a number in terms of new units per year, even if you just put an inline multiple of 35 times, and by inline, I mean in line with, the 5-year pre-COVID multiple that Chipotle traded at, you already get to $1,600. And, that's, 5 years pre-COVID was an oversupplied market in terms of, way too many restaurants out there. I mean, the opportunity to gain market share is unprecedented in the last 2 decades, not just for Chipotle, but for every restaurant. And so you can even argue for
interesting. Yeah. Sorry to interrupt. What's interesting between the two of you is you both like the company, but the valuation seems to be a big disparity between the two. Over at Morningstar, for example, RJ, you talked about some positive things, but you do say you're concerned about valuation. And so while Wedbush is there putting a $1,600 target, where do you think fair value really should be?
Yeah, I think it's a lot lower than that. I think somewhere in the the $1,000 range. We have a stated published fair value estimate of $900, but probably bump it up with a little bit of time value of money. The question I have is, the company's talked about 6,000 units, average unit volumes of 2.5 million, and restaurant margins of 25%. And I agree with Nick, that all seems very doable. But at the current prices, $1,300, and even to get to a $1,600 price target, you have to justify 8,000 or 9,000 units. You have to talk about 4 million in average unit volume and restaurant margins of 30%. And frankly, those are numbers the company hasn't hit. I know a lot of that's going to be market share gains post-pandemic, and there is a great opportunity for Chipotle. They're going to be one of the top recipients of that. There's going to be great opportunity delivery, but those numbers are just a bit too much for me, especially when there's going to be some other well-capitalized players going for that same market share out of the gates here too. So I agree that I like the company. I think Brian's done a great job since taking over, particularly in the marketing front, has really revitalized this company. But I just think that the valuation right now, you can't just put the same multiple that you once put on this one. I think that there's got to be some sanity put on with this valuation here.
So I also wanted to talk about other things. You mentioned some costs earlier, RJ, margins and costs, and there's always uncertainty going forward. What about labor costs? What about costs of opening new restaurants? What about costs of the carne asada, for example, RJ?
Yeah, those are all factors.
Labor, opening new restaurants, carne.
Yeah, I think that that's something that the management's factored in. And actually, one of the parts I do like about the story, one of the reasons that the story may work longer term is that they have developed, at least for the store openings, this new Chipotle format where it's got a pickup window. Those are a little bit less capital intensive than the legacy locations. I think that is that is, as you go forward, these with these pickup windows that are ultimately a higher margin transaction than in-store or even delivery, I think that could be an opportunity to bring down costs. Labor cost is going to continue to be an issue, but I suspect that over time the company will look to some automation solutions to really help out, where they can to offset some of those costs. I think everybody in the restaurant industry, I think, will look at that. And then, just the what they've been seeing the last couple of months, running a leaner, more efficient operations during COVID. I think that'll help to at least kind of balance the labor costs going forward.
Nick, your thoughts on labor costs, opening new restaurants, and carne asada?
Well, we already know that they're targeting 200 units, next year, and they did 140 units last year. And 75% of these newer units are going to be units with Chipotles that are opening at 25% higher sales volumes relative to units without Chipotles. And so we're already seeing new unit volumes that are at 85 to 90% of system averages, which again is unprecedented in the history of Chipotle. And what that does is these Chipotle stores are about 200 basis points, at least 200 basis points higher margin units, and that's labor, that's the mix of order ahead, come and pick up instead of delivery. And so as the mix of units changes towards Chipotle, we're going to have lower labor costs, we're going to have lower other operating expenses, and in terms of percentage of sales, we're going to have lower rents as well. So margins are certainly headed in the right direction.
Is Chipotle your favorite stock that you cover, or some of the other names that you cover, Nick, for example, maybe in the food space or something else for that matter? What are among your favorites?
Well, Chipotle is certainly up there. Yeah, I also like names like Jack in the Box and Wendy's at the moment. My top pick at the moment is Jack in the Box.
That is your top in the moment. RJ, your thoughts on expanding it out beyond Chipotle?
Yeah, I like some of the other QSR names, Restaurant Brands International and Yum Brands. Each one of these has a brand that within the group that is struggling at the point. Pizza Hut for Yum Brands and Tim Hortons for QSR. But I think that looking at the market share opportunities for these companies going forward is pretty impressive. I think there's also some underappreciated moves within franchisee bases within these companies too. I've done a good job consolidating among younger, more capital, or put it with franchisees who are willing to put up the capital to grow these businesses going forward. So I like those names right now, both QSR and Yum Brands, I think are pretty attractive at the valuations they're trading at. Right,
no doubt. Nick, final thought here on the big picture about Chipotle and just getting everything out there. It's my understanding carne is very popular, carne asada, but it costs more. And the product line, is the product line on the menu just right?
Well, look, they'll be the first ones to admit that there's a limited supply of carne asada, and just like last year, it's a limited time offer. So it'll be gone by early Q1, just like last year. Now, we do have a couple of other products that are ready to to roll out in terms of new menu items like the quesadilla and so on. And I think they're going to be just successful and comp drivers, next year.
Okay. All right. Well, I enjoyed this very much, and I also enjoy that, Nick, your price target is $1,600 above where we're trading, and RJ, your target is probably $900 or $1,000 below where we're trading. Thank you both, Nick Setyan and RJ Hottovy. Thank you very much.